This is your weekly market watch for the Seattle area real estate market. Hey everyone, a little late this week, but it's Friday, November 7th, and this is your weekly market watch for the Seattle area real estate market. We were at a conference for our brokerage this week, so I wasn't able to film this earlier in the week, but we still have some relatively good news this week about the market. Let's talk about the mortgage rate to start. So essentially the mortgage rate is at a little bit of a high for the past 3 weeks. It's at 6.32%, and that's for a 30-year fix. Although that's a little high for the past 3 weeks, this is still a lot better than what we saw at the beginning of the year. So it is really a good mortgage rate for what we've been seeing and what people predicted earlier this year. If you remember at the beginning of 2025, people were predicting that the mortgage rate would end up somewhere between 6 and 6.5 by the end of the year. And that's squarely where we are and have been for the past 3 or 4 weeks, which is really nice because that gives us some indication that there's some steadiness in the market, that although we would all love to see mortgage rates come down, that we do have a pretty steady mortgage rate right here. And we're seeing a lot of buyers be able to buy down their rate. So if you're not sure what that means, I can tell you that when you strategize an offer with our team or with your agent, you should be talking about how a buy down works and basically how seller credit can get you that buy down. It's a strategy that we're really employing a lot, especially on new construction homes. We just made an offer this past week on a single family home that had been completely remodeled, new to market, in the $1.2 million range, and we got seller credit from them. We got almost 2% of the purchase price in seller credit from them to be able to put that towards closing costs and buy down the rate. Today we're making another offer asking for some seller credit as well. So it's really a unique and great strategy to employ if you're worried about your monthly payment and you want to be able to buy down the rate. Let's talk about the other rates today. So I mentioned the 30-year fix is at 6.32. The 15-year fixed is at 5.82% today. And then the 30-year FHA and VA are at 6.03 and 6.04 respectively. So we do see those in line with what we've seen over the past 3 weeks. Again, like I mentioned, we're at the highest levels of the past month in terms of mortgage rates, but I don't see that as a big issue. Obviously the government shutdown is affecting rates, but we saw the Fed announcement on October 29th. It was a lot lower. It was at like 6.13 before that. And then the announcement caused that to go up. And then we also see that there's a little less concern for the labor market in some of the most recent economic reports. And so that is keeping the rate a little bit higher, I would say, right now. Now let's talk about what's happening specifically in the Seattle real estate market when we turn to what has been going on with condos and single family homes. So when we look at condos over the past 7 days, the number of new listings is down 31 at 115 new listings. Condos going under contract is down 2 at 148 over the past 7 days. And then sold listings are up 4 at 116 over the past 7 days. So these numbers are all pretty much aligned. They're right in the 100 to 150 range. That is showing you honestly that it's pretty steady. The market is pretty steady. We're not seeing big swings of listings going under contract. We're not seeing big swings of condos coming onto the market. So we're showing that it's pretty steady within that 7-day period. Now, this isn't for the market as a whole. Generally speaking, we are pretty much in a buyer's market, depending on what you're looking for and where and what price. So when we turn our attention to residential homes, so single family homes and townhomes, this week we saw new listings down by 61 at 285 new listings, pending listings down by 57 at 466, and then sold listings up by 21 at 395. So here you can see a much larger variation in the numbers. So homes going under contract, 466 over the number of new listings, which is almost half of that at 285. So we're seeing a lot of the homes that were already listed get under contract. So as buyers are moving towards the end of the year, if they see an opportunity or if they need to move this year, they're taking those homes off the market. That doesn't necessarily mean that all of those sellers are getting the best deal, but it does mean that they're getting that home sold. And then with the sold listings being at 395, you're right kind of in the middle of those two numbers. So overall, the market is relatively relatively good right now. The interest rate is making it a little bit more affordable for buyers than it was at the beginning of the year, and especially utilizing some of those seller credits for a buy down. If you don't know what that is and you want to strategize what that means for your purchase in 2026, reach out to us. You can either text or email us, and we'll set up a consultation to talk you through the strategy of buying a home and what would be most beneficial for you. Similarly, if you're thinking about selling your home next year, now is when you need to start preparing. So if you are thinking about 2026 being your year, you really want to be ready to hit the market towards the beginning of the year, and we can tell you exactly why. Reach out, text or email, and let's set up a strategy session. It's completely free to you, and talk through your options. Thanks for tuning in. We'll see you again next week.